Hi everyone, let's go over my low time frame and micro bearish Elliott Wave scenarios on Bitcoin, starting with the first low time frame bearish scenario where we are looking for a wave 1 to the downside, followed by a wave 2, and now at the beginning of a bigger wave 3 to the downside, where usually a minimum target is the 1.618 trend base fib extension taken from the high to the low of 1 to the high of this wave 2, sitting at 27.8k. In this scenario, the high of wave 2 is then already in after a zigzag to the upside, which is the most common corrective pattern for a wave 2, hitting the 0.5 Fibonacci retracement taken from the high to the low of 1, which is also a common target for a wave 2. If price would move towards the upside and reach this high, then this particular scenario is invalidated. If we look at the second scenario that I have, then wave 2 is not yet in and we still expect price to move towards the upside. In this scenario, wave 1 is the same, but we're now having a 3-wave structure in an expanding flat inside a wave 2 for then continuation to the downside in a bigger wave 3. And what is interesting about this particular scenario is mainly time, because as you can see over here, the vertical line is a fib time taken from the high to the low of wave 1. And you can see that this high over here is very, very short in time compared to a big wave 1. And then you have this very, very short wave 2. Most commonly, corrective structures are ending after the 0.382. And this high over here was made even before the 146 fib time, which is incredibly short. So therefore, in this scenario, I'm looking then for a 3-wave structure in an expanding flat. Reaching that double top is very interesting at 29.7k. However, there is more resistance around the 29.7, 29.8k area for then the potential high and a move towards the downside. You also see that currently price is right on top of the final support box that I have over here, which is sitting between 28.993 and 29.052. And after this wick to the downside, it would be good to find support again and move to the upside. At least that's what you want to see in this particular scenario. Now, if we then look at the ABC expanding flat in more detail, then this is what I'm looking for over here. We then have a 3-wave A to the upside, followed by any corrective structure in a wave B, where the most common target area for a wave B is between the 1.236 and the 1.38, which as you can see has been wicked into. That is very, very nice indeed. For then looking for an impulsive wave C to the upside. The invalidation of this scenario is price wicking below this low over here, and this was basically the last man standing. We also have a 30-minute order block over here on the left side if I would go to the 30-minute, which was in nice confluence with this target area for wave B, for then an impulsive C to the upside. And after this move to the downside, which as you can see happened on high volume, it would be nice to at least see price going back above this support box over here that we have around 29k, maybe have a little bit of a retest before continuation or just continuation in general. But a wave C is a 5-wave structure. So you're going to be looking for wave 1, 2, 3, 4, and eventually 5 waves to the upside, where in between where price is now and the 29.7k resistance area, we have another resistance area over here between 29.3k and 29.4k for maybe a bit of a reaction over here, maybe a bit of downside before then continuation, as that is what you want to see in this particular scenario. If we then look at the CVD divergences, I actually have to go to the 5-minute because the CVD divergences hinted a lot for more downside, and that is shown by what I can show you over here in the updates section in Discord. This screenshot over here. I made this screenshot for the silvers where I said, look, just look at what's happening, right? There's a lot of absorption of market longs going on. Yes, we have some bullish CVD divergences, but you see constant bearish CVD divergence. Each red line is a new bearish CVD divergence while price was moving to the downside, and even with the bounce here to the upside, more bearish CVD divergences. And if we then go to the AGGR chart and we are on the 5-minute, then you can see that over here, well, we had the constant bearish CVD divergences. I won't point them out all of them, but what we saw is price move to the upside over here and then created bearish CVD divergences on blue with this high. So on the left, you see this blue top over here. And if I put my cursor on the blue line and you look to the right, then you can see another bearish CVD divergence again when price is moving to the upside. So each move to the upside, each little move has been countered by bearish CVD divergences, creating that downwards pressure for this move to the downside. And as it stands now, it's pretty much like neutral. You could say, hey, we have more bearish CVD divergences over here because lower high on price, higher high on yellow. But I prefer to look at CVD divergences on the right side of a new high or new low. So preferably on the right side of this low over here, I like to look at divergences here. So if we see more bearish CVD divergences here, then can be interesting for more downside or potential bullish CVD divergences. We have to wait and see about those divergences. But this has been going on basically the whole day, which I think was a clear sign of price moving to the downside. And at least take the lows over here, where also we had a double bottom over here that price created, as we had low number 1 and low number 2. And another sign, which I also mentioned in the update section, was the 886 bounce over here. Price moved to the downside, hit the 886, which is a rare target for a wave 2 and a common target for a wave B or a wave X, which was another sign that this move to the upside was likely part of a corrective structure for more downside to come. If you then finally look at the news, we have news coming up at 8 p.m. Central East European time, so make sure you trade safe around these hours as price might be volatile. And if we finally look at the probabilities of the different scenarios, then, well, on the medium time frame, we are looking for more downside for 27-26K. I actually didn't show that scenario in this video, but in the low time frame scenarios, I'm still preferring this scenario for a higher wave 2, mainly because of time. This wave 2 is so incredibly short, and as long as the invalidation is not hit, meaning this low over here, or at least price going below the 1.38, this scenario for me still stands. As long as this scenario is not invalidated, it has the higher probabilities from an Elliott Wave point of view. It's not about what's preferred or alternative, but from an Elliott Wave point of view, this is still the higher probability scenario till invalidation. And on the micro, if we then zoom in at the moment, then what I'd be looking for is price to at least go back above this, well, now resistance area, was support over here, can turn into resistance. So it would be nice to at least move to the upside and then continue from there. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.